2025 is not a year of chaos, it's a year of realignment. Across the world, liquidity is expanding, capital is repositioning, and the global financial map is quietly being redrawn. In this briefing, we decode the three engines behind the global liquidity reset: capital flows, dollar pressure, and energy repricing. Because when money moves, power moves with it. The latest BIS data shows that offshore US dollar credit has jumped from 3% growth to 6% in a single quarter. This is not random expansion, it is coordinated repositioning. We are seeing liquidity migrate into safer jurisdictions, energy-linked economies, and politically aligned capital corridors. And more importantly, the pace of liquidity creation is no longer synchronized. The United States, Europe, and Asia are no longer expanding liquidity at the same rhythm. And this divergence is creating a new financial gravity map. This is the first foundation of the reset. The dollar is not collapsing, but its monopoly is under structural pressure. More nations are increasing their cross-border settlement in non-dollar currencies, not to abandon the dollar, but to hedge against its centrality. This creates a two-layer system: dollar as the core, regional currencies as shock absorbers. Every time global liquidity rises, this multi-layer system becomes more active. This is why we call it a liquidity reset, not a dollar crisis. The world is not rejecting the dollar, it is rebalancing around it. Energy markets are entering a structural repricing phase, not because of supply shocks, but because capital is repositioning toward energy security, resource ownership, and long-term infrastructure. IEA reports show that global energy investment is pushing into new highs, not in old fossil pathways, but in strategic corridors tied to geopolitics. This reshapes trade routes, currency flows, and the relative power of nations. Energy used to follow markets, now markets follow energy. Japan plays a unique role in this reset. Its low-yield environment, massive institutional capital, and strategic geographic positioning turn Japan into the quiet liquidity buffer of Asia. When global liquidity expands, Japanese capital becomes the amplifier. When liquidity contracts, Japanese institutions become stabilizers. This is one reason your audience, primarily viewers from Japan, is not just watching the markets. They are watching their role in the global flow. Capital flows are no longer reacting to markets, they are redesigning them. The liquidity reset of 2025 is not a single event. It is a structural transition from old global synchronization to a new multi-axis financial map. If you want the signal behind the noise, and not just the headline version of global finance, you're in the right place. Here's the signal behind the noise: Global Pulse 360 Leaf. Subscribe to stay ahead of the global shifts.